Well, I think, we sort of forecasted these kind of the numbers for the ASEA results this month. We were expecting a mild recovery, and that's been the case. I don't think we should get too excited. I think it's against a very low base comparison of August 2021, when the semiconductor supply crisis was really starting to kick in. Supplies, sort of stock cars had unwound in the first half of 2021 when the semiconductor crisis was starting to kick in. During summer, many plants were shut down for the semiconductor issue last year. And production volumes and sales volumes were very low ebb at this point last year. So really, it's the low base comparison is the main factor here for the growth level.
I think, Tim, I'll just very quickly tell you the theory, I think, is that they could sell as many cars as they could get out on the market for pretty much most of the post-COVID era. They've been desperate but have been unable because of the semiconductor problem. Now they're actually easing some of the problems on that supply chain. The consumer's pulling their belt in, and there's a real different dynamic and a different problem, i.e. from selling as many cars as they possibly can to now they're having to incentivize, and that's going to hurt some of the margins.
Yeah, that's very, very astute analysis. But yeah, I mean, it's still a very much a supply limited market. A lot of the premium manufacturers, and especially for electric vehicles, I mean, Volkswagen were looking at waiting lists of around 12 months for their range of electric vehicles until very, very recently. I think that's still pretty much the case. So certain vehicles, are still very much in demand. It is a case of how many can we make that they're going to get sold. And what's happening as well, and we saw this with the results from the manufacturers last year, and I think it'll be more or less the case again this year, because it is a supply limited market. They can sell these cars for pretty much top dollar. They're really maxing out in terms of pricing and also model mix as well. So it's still going to be the case for a long time, but it's definitely also the case at the same time that consumers are going to be pulling in their belts. I think we're going to be interested to see the data on cancelled orders, especially from private consumers in the last third of the year.
Tim, these are automobile companies that have worked very hard on lineup in recent years, particularly around some of the newer energy vehicles. Any sense that this is coming through in the data now, particularly if we look at, say, Mercedes, Stellantis numbers?
Oh, yeah, you're seeing it all the time. You're seeing massive, accelerated growth in battery electric vehicles amongst the big OEMs model ranges, an increasing percentage of their overall volume. It's really taking off, and the manufacturers are committed to changing the mix between combustion engines and BEVs, and this is happening. You're seeing it all the time, and there's definitely a sea change starting in the market in that regard.
Tim, the other question I have is around the regions. As you look across Europe and the data for the month of August and even across the course of year to date, you can see that there are very different numbers at a country level. What's going on here under the hood?
There's volatility. You're seeing it in the OEM numbers as well. You just mentioned some of the headline OEM numbers, individual markets. It's about what's happening on the ground. It's about how OEMs are allocating vehicles to certain markets. If it's if it's a market where they can extract as much profit as possible, logically they're gonna dedicate more models, more production output to that particular market. It's the same with the volatility in the headline OEM numbers. It's just who's getting the vehicles out there, who's being able to manufacture the vehicles and get them into dealers and get them registered. So it's on a case by case basis. It's a very volatile situation for the overall market still at the moment.